Which oil-producing countries face the greatest risks of civil unrest as low crude prices strain national budgets? Verisk Maplecroft of Bath, UK, suggests answers in a study entitled Political Risk Outlook 2016, published on January 6th. The public finances of major commodity-producing countries are set to remain under intense strain in 2016, in many cases forcing unpopular fiscal tightening measures which will increase the risk of societal unrest, the study says. With oil prices expected to stay below $60 a barrel this year, authoritarian regimes in several producing nations will have trouble maintaining the balance of populist spending and repression essential to domestic peace. Expatriate operations in unstable countries could face disruption from demonstrations and mass mobilization, the study warns. To assess the risk of frustration becoming disruption, the study plots oil prices at which a country's budget balances against a measure of the latent risk of protest and conflict that Verisk Maplecroft calls its Civil Unrest Index, or CUI. A CUI of 1 indicates highest risk and 7 is lowest. The study treats Iraq and Libya, both recently embroiled in civil war, as outliers. Among the other producing countries, Nigeria has the highest risk, with a CUI between 2 and 3 and an oil price needed to balance national accounts of $100 to $120 a barrel. Venezuela requires a slightly higher oil price but scores slightly better on risk of unrest with a CUI of 3 to 4. Iran and Algeria have CUIs in the same rocky range as Venezuela but lower budget balancing oil prices, $80 to $100 a barrel. Russia, Saudi Arabia, and Oman also have fiscal break-even prices of $80 to $100 a barrel, but higher CUIs, between 4 and 5 for Saudi Arabia and Russia, and 6 for Oman, best in the group. The other producers on Verisk Maplecroft's scorecard, Qatar and the United Arab Emirates, need the oil price to be $60 to $80 a barrel to balance accounts, and like Oman, have CUIs on the lower risk segment of the scale at between 5 and 6. Point of perspective, some of these countries were considered unstable when crude prices exceeded $100 a barrel. I'm Bob Tippie, editor of Oil and Gas Journal, and that's the editor's perspective that appeared first in text at www.ogj.com on January 8, 2016.